Hey everyone, welcome to docwtrades.com. We are taking a look at the gold chart to start the day. As the gold chart is essentially the talk of the town right now. I always find that I always find something very interesting when I go to the lobby of my building. I'm known as the guy that is the trader, the stock guy, the guy that follows the markets, the stock jockey, so on and so forth. So if there's something moving and everybody's trading it, I'm the guy that they want to talk to. And I've found in the 8 years of living in my building, when there is a certain thing that anyone and everyone want to talk about when they see me, that is historically a very good sign that there is some type of bubble to some extent. We are at least at a short term top, or we're very close to a short term top. I have a lot of examples with this. I've been living in this building that I am in now for about 8 years now. So I've seen this happen with Bitcoin multiple times. So every time Bitcoin forms some type of peak short term top, everybody's talking about in the elevator, talking about in the lobby, they're talking about in the hallways. I've seen it with Bitcoin multiple times. I saw it with GameStop. I've seen it with stocks like Nvidia and Palantir. Those two stocks have basically done nothing, essentially, for 6 or 7 months, give or take. And 6 or 7 months ago, everybody was talking about Palantir and Nvidia in my building. I've seen it, multiple examples of this. And right now, the talk of the building, the talk of the town on Wall Street is gold and silver. And so I am showing you this wonderful gold chart here. And just recently, over the past week or so, I cannot go out and about in my building, whether it's to the pool, whether it's to any hallway, whether it's to the lobby, the front desk, whatever, without having someone, if they see me and say hi to me, the topic immediately switches to gold and silver. And any other time that I've lived in this building, and it's been about 8 years now, any other time when that happens, when everybody's talking about a specific thing that they are latched onto, that they need to tell me about, that thing, whatever it is, usually tops out for at least the short term. It doesn't mean that that thing will never make new highs again. It doesn't mean that the bubble's going to burst. No, it just means that a short term top for at least a couple months or so is in. And for the past week, really the past week, I mean, I have had now, I want to say 4 instances where people have come up to me talking about the metals, gold and silver. And it's multiple people. So I'll be there in the hallway and I'll have 3 or 4 people telling me how, they bought gold and they bought silver and now they're selling it. And it's like, whoa, 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 whoa. Where were you 3 years ago with this? Well, 3 years ago you wanted to buy Bitcoin and now you want to buy bone. It's like, whoa, 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 back off. And so since I am known as the market guy, with all my screens, they got to tell me about it. So that is a very good tell. And what's interesting is specifically the past week. That's why I'm making this video discussing this specifically for the past week. I have at least 4 instances of being in the building where people have come up to me talking about specifically gold and silver. And I've even gotten pictures from other people where they're telling me that, and this is other trader friends of mine, so they have this, there's the same effect on them as it is on me, where their friends know them as the market guy, so they tell them stuff. They tell them stuff, like they need to know kind of thing. And there's nothing wrong with that. It's just how it is. And a trader friend was telling me how he was sending me a picture of his friend that just sent him pictures of bid and ask prices of metals. And one of the pictures had like rhodium on it. I'm like, rhodium? What the? It's getting kind of crazy. It's all I'm saying is that, when it crosses from the screens into the real world per se, and the average person is involved, it doesn't mean that it's over. It doesn't mean that the bubble can't continue, because it very well can. But it means that you're in this extreme frothy state. And like I said, like all these instances, like at least 4 instances over the past week where people in my building cornered me talking about gold and silver. That's very mania-ish to me. And you look at the chart here of gold, and you see this big move like this, where you have this like shooting star candle. We'll zoom in here. You have this shooting star candle and this big reversal back down to the 20-day moving average. Now, is this it? Is this the top in gold? I don't know. Okay. And that's one of the things about these videos that I don't like, is that, people project on me like I could predict the future. I can't predict the future. No one can predict the future. I can just see what's in front of me. But this chart pattern does look toppish. It looks like a blow off top. I've seen them before, and you get this like shooting star type of candle here, right here, and then this big reversal down to the 20-day. Now, it so far is holding the 20-day moving average. That is very constructive for the bulls. But I can easily see it slice through that and go down to the lower Bollinger Band for gold. Now, this is looking at the gold futures contract. So you can also take a look at the GLD. I'll take a look at that as well. But this is very, very toppish action, right? Extreme upward momentum extended to the upside, and then a big reversal like this. So whatever you do, be very careful in gold and silver. And just looking at from a technical standpoint, from a chart standpoint, this looks like this can be some type of blow off top. That is a big reversal in the rate of change oscillator in just one trading session. And you should expect, with that big of a move from, the 11 handle on the rate of change down to below the 0 line, that is very bearish. That is very like at least for the short term, a blow off top. And it makes sense where you can have more further downside action, and then just elongated period of back and forth, sideways range contraction action at least. But this big up move is very possible coming to an end. I'm very curious to see how this plays out as well, because I don't know. But, you get this big move up, this big shooting star type of pattern, and then a big reversal down, and then the big move down in momentum. it spells out some type of topping action. So let's take a look at GLD. Not as a continuous chart as the gold features, but you can see it very clear here. Uh, this big hammer and then a reversal down. So that is to the 20-day moving average. And then this big sharp drop in momentum on the fast lane on the 310 oscillator and the rate of change from being over 10 to being now below 0. Very, very bearish. So I think it makes a lot of sense when you have this big drop in momentum to get some type of continuation in this drop. We'll see how this plays out, but this is not some type of normal natural correction to a large extent. It's more like a blow off type of correction. And even if you're a bull in gold and silver, I mean, you need some type of corrective action. You need to take a break. That's what everybody. So you don't want something that just goes straight up because then it crashes. You actually would like some type of sideways consolidation to take place. At least, you know, this is just, at least if this is not some type of blow off top, this is some type of sideways consolidation that could easily set up another wave higher. So I'm very, very curious to see how this plays out in the metals and gold. You know, and that's why we come to the screens every day to see how this movie plays out. Because I don't know. I mean, it looks like it could be some type of blow off top, but it can also turn into some type of, you know, back and forth consolidation like this that sets up for another move higher. So let's take a look at silver. And you can see here in silver, this is even a bigger drop in silver. And it actually traded down to 74 handles. 74 handle, and that is a huge drop in momentum. So this is big. This is a big, big, big drop in silver. And so, it's not surprising. It was due for some type of corrective activity, but this is a blow off type of top formation when you just get this boom, shooting star type of pattern, this big reversal. And it did bounce off the bottom, but it closed below the 20-day. And then you get this huge drop in momentum. The fast line is now below the slow line. You can easily get another move down towards 0. And then this rate of change made new lows. So that is indicative that it should continue its corrective action further and not just go straight back up to the upside. And this is just the way it is, the way it shot up like this and had a shooting star type of pattern and a big reversal. That's very climactic blow off type of behavior. Again, I'm not saying that this is a top. I'm just saying that kind of acts like a top, not just in the chart action, but also in the mania of the crowd. So keep that in mind. Keep that in mind. Be very careful if you're trading in gold and silver going forward. And when I say a top, that doesn't mean that silver can't go above 120 again. I'm just saying that it's at least a short-term top and it's going to go through some consolidation for a considerable period of time. Maybe a couple months, maybe a year, who knows, before it goes back up again. And that is due. That is overdue for the metal. So that is it for my ramblings on in the metals complex. And the other interesting news in the markets this week was the announcement that Donald Trump announced Kevin Warsh as the new Fed chairman. And I think that he is right fit for the job. He certainly has the experience. and has the pedigree, I guess you could say, the education, so forth. Studied at Stanford University under Milton Friedman, a Nobel-winning economist. He went to Yale Law School. He worked for, in my opinion, one of the greatest traders of all time, Stanley Druckenmiller, which I think is fantastic. He also worked in the private sector with banks and so forth. So he has the experience, he has the knowledge. He's been in with the Fed before, and I think that I really thought this out last night. I think that Kevin Warsh can be a much more of a tape reading Fed chair than Jay Powell. I think one of the big problems with Jay Powell, I don't think he was like some horrible guy or absolutely horrible Fed chair. I just think that he made some key mistakes after COVID. And his big problem was he paid too close attention to lagging, old, delayed data. It was too data dependent. And he didn't look at the tape action, the prices of the markets, goods and services, and anecdotal evidence, talking to CEOs and bankers and so forth that was right in front of him. By the end of 2020, he should have been on the ball looking to hike rates quickly, but he wasn't. He didn't hike rates until 2022. So he ended up doing what he should have done years later. And this year he's cutting rates. Well, he should have done that again. And what is always keeping him behind the curve is that he's not looking at the markets. He's looking at old lagging data. I don't know if that's going to necessarily be the case with Kevin Warsh, because having that training under Stanley Druckenmiller and Milton Friedman, he'll look at the old lagging data, but he'll also be very acute. I think he'll be very aware of what's going on in the markets right now. And the best Fed chairs are the able to take bold steps to take action when it's needed, even though it's unpopular at the time. So that's why if you try to appease everyone and be popular at the time, you'll end up being behind the curve. And I think that's what happened with Powell. I don't think he's a bad guy or anything like that. I just think that he relied too much on lagging data and didn't look at the real time data, real time market action to determine his decisions. I don't know if that's going to be the case with Kevin Warsh. I think he's going to be very acute to what's going on in the moment to help make his decisions. And that can set him apart. And I hope it does. We'll see what happens. That can set him apart as a great Fed chair. Now, all that being said, as a market participant, the markets knew, they caught on quickly, and they knew that Jay Powell was always late to the party. So they did not price in anything into the future too fast. It will be very interesting. This is what I want people to keep in mind. Pay attention to see if that dynamic changes. There's this ongoing debate. What comes first, the chicken or the egg? Do markets make the Fed move, or does the Fed make the markets move? And, it's kind of probably a symbiotic relationship. Right now the markets have not been moving too soon in any particular direction, because they know that Powell is slow to the party, so they're not going to price in those things too quickly. But now you have a new, a new piece to the puzzle. You have a new dynamic in the environment, and someone that is trained under Milton Friedman and Stanley Druckenmiller, he's going to be looking at the prices today and maybe much more quicker making decisions too. He was at the Fed during the heart he being Kevin Warsh was at the Fed during the depths of the great financial crisis. So he's been battle tested. That's what's great about him. Um, he may be very, much more quick to, cut rates, or in the future, if inflation is an issue, he may be much more quicker to hike rates as well. The moves that we saw on Friday, so we saw a rally in the dollar. We saw big drops in gold and silver, as I showed you earlier. You see these big drops. We saw a drop in interest rates. Let's take a look at the 5-year drop. Is this the market saying, okay, now we got to start pricing in Warsh in the next couple months? He's going to be cutting rates. I don't know. That is a pattern that you have to be aware of, and you have to look to see if that plays out. So I did not talk about a lot of individual stocks today, quite frankly. Right now, I really only have two real favorite stocks right now that I've talked about a lot recently, and that is Micron and Bloom Energy. And I thought that talking about the market landscape with the new Fed chair, the new Fed chair nominee in Kevin Warsh, and this gold and silver mania that we're seeing, it was much more appropriate with the market that we have right now. So that is it for today. We'll talk to you all later, and take care. Bye bye.